Long before digital money became a global phenomenon, there was e-gold. A digital currency backed by physical gold, built on the idea that money should be free from government control, central banks, and the traditional financial system. It was the first serious attempt to create a global digital currency, and for a while, it actually worked. By the early 2000s, millions of dollars were changing hands every day on the e-gold network. It became a favorite of early adopters, privacy advocates, and tech pioneers. It was even used for some of the first real-world e-commerce transactions. But not all that glitters is e-gold. As the transactions piled up and the money flowed in, e-gold drew the attention of law enforcement. And what started as a revolution in digital finance quickly turned into a legal nightmare. Raids, seized servers, frozen accounts, it all happened. In the end, e-gold became a cautionary tale, a digital dream that crashed into the hard reality of regulation. This is the story of the digital gold that almost changed the world, but ended up paying a high price for it. The 1990s were a time of technological optimism. The internet was exploding, personal computers were becoming mainstream, and visionaries were starting to imagine a world where money itself could be digital. One of those visionaries was Dr. Douglas Jackson. A medical doctor turned entrepreneur, Jackson had a bold idea. What if you could digitize gold, the oldest, most trusted form of money in human history, and make it as fast, portable, and convenient as email? What if gold could move at the speed of light? This idea wasn't as crazy as it might sound. Gold has been a store of value for thousands of years. It's scarce, durable, and widely trusted. But in the modern world, it had become clunky and impractical for everyday transactions. You couldn't exactly send a bar of gold to pay for your groceries. Jackson believed he could fix that. He saw a way to combine the historical stability of gold with the speed and efficiency of the internet. And in 1996, he launched e-gold, a digital currency backed by physical gold. The concept was simple but revolutionary. Users could open an account on the e-gold platform, deposit physical gold, and send digital gold credits to anyone, anywhere in the world, instantly. These digital credits were 100% backed by real, tangible gold stored in secure vaults. You weren't just sending numbers on a screen, you were moving real wealth. And because e-gold charged tiny fees compared to traditional banks, it quickly became popular among tech enthusiasts, early internet merchants, and privacy advocates. In its early days, e-gold felt like a revolution. It was borderless, digital, and private, a proto-cryptocurrency years before Bitcoin. By the early 2000s, it had over 1 million users and was moving billions of dollars in value every year. It was, for a brief moment, the closest thing the world had ever seen to a truly digital global currency. The real brilliance of e-gold was in its backing. Unlike today's stablecoins, which are often backed by fiat or just algorithmic promises, e-gold was backed by real physical gold held in secure vaults. This gave it a stability and value that other early digital assets of the time lacked. Even when the stock market was crashing or the dollar was weakening, gold held its value. And that made e-gold attractive to people looking for a safe, reliable form of online money. But there was something else that made e-gold special. It was borderless. In the late 90s, sending money across borders was slow, expensive, and complicated. International bank wires took days and charged hefty fees. But with e-gold, you could send value instantly to anyone in the world. It didn't matter if you were in Tokyo, New York, or Berlin. As long as you had internet access, you could move your digital gold without the hassle. And that's why it quickly became popular among a diverse group of users. Early adopters looking for a stable digital asset, privacy advocates who liked that transactions didn't involve banks, international businesses who wanted to bypass the slow, expensive banking system, even gamers who started using it as a currency for virtual items. But there was a catch. E-gold wasn't anonymous. Unlike Bitcoin, which would later use pseudonyms and public keys, e-gold accounts were linked to real identities. The problem was that it didn't have the anti-money laundering or know your customer safeguards that regulators demanded. This made it vulnerable to criminal misuse. As e-gold grew, it started attracting less than reputable users who liked the speed and stability of digital gold, but didn't want banks looking over their shoulders. Dr. Douglas Jackson envisioned e-gold as a trustworthy, efficient form of online money, but he didn't account for how it would be used. By the early 2000s, e-gold had grown so large that it was impossible for Jackson and his small team to monitor every transaction. And as we'll see next, that lack of oversight would become its downfall. Because as e-gold became more popular, it also became a target. And when law enforcement finally took notice, they didn't just investigate, they shut it down. By the early 2000s, e-gold had become a global financial network, but it was operating in a legal gray area. It wasn't a bank, so it didn't have to follow banking regulations. It wasn't a credit card company, so it didn't have to comply with payment network rules. It was a digital anomaly, a trust system built on metal instead of code, and users instead of middlemen. But, that lack of oversight came at a cost. As the volume of e-gold transactions exploded, it started to attract the wrong kind of attention. The platform became a favorite for online scammers, fraudsters, and criminals looking to move money without government oversight. It wasn't just being used for legal business transactions anymore. It was being used to launder money, finance illegal operations, and facilitate black market trades. In 2005, the U.S. Department of Justice took notice. And that's when the problems really started. In 2006, the U.S. Secret Service and the FBI raided e-gold's offices. They froze accounts, seized servers, and confiscated records. They accused Dr. Douglas Jackson and his team of operating an unlicensed money-transmitting business, facilitating money laundering, and knowingly supporting criminal activity. The charges were serious. And the evidence? Well, it was damning. e-gold's entire business model was based on trust, but it had no meaningful anti-money laundering or, AML or Know Your Customer safeguards. Jackson had built a global digital currency network, but he hadn't built the compliance systems to protect it. It was fast, efficient, and borderless. But it was also, honestly, a regulator's nightmare. Facing massive fines, criminal charges, and the threat of decades in prison, Jackson and his team were forced to cut a deal. In 2008, they pled guilty to operating an unlicensed money-transmitting business and conspiring to commit money laundering. The e-gold website was shut down, its servers confiscated, and its accounts frozen. The dream of a digital gold economy died in a swarm of federal agents and legal paperwork. And in the end, the e-gold saga became a cautionary tale, a lesson for every digital currency that would follow. If you try to replace the financial system, you can't ignore the laws that govern it. Because when the government finally takes notice, it's not just your business that's at risk, it's your freedom. The final fall of e-gold wasn't just a business failure, it was a warning for every digital currency that would come after it, including Bitcoin. But the story of e-gold doesn't end there, because while Dr. Jackson and his team were cutting deals with federal prosecutors, another digital currency was quietly emerging, one that would learn from e-gold's mistakes and build a system that couldn't be shut down, a system that wouldn't just store value in vaults, but would distribute it across thousands of computers around the world, a system that didn't trust anyone and that no government could seize or shut down. We know it today as Bitcoin, and that's the strange legacy of e-gold. It proved that there was a demand for digital money. It showed that people wanted a faster, cheaper, borderless way to store and move value. But it also warned the world about the risks of building a financial network outside the law. And in truth, the lessons of e-gold would echo through the history of crypto for decades to come. Because while e-gold may be gone, its ideas live on in every Bitcoin block ever mined. Looking back, it's clear that e-gold was ahead of its time. It was a bold experiment in digital finance, a pioneering attempt to free money from the control of banks and governments. It proved that people wanted a faster way, a cheaper way, a borderless way to store and move value. It was decentralized in spirit, if not in structure. And it showed that the internet could be more than just a place to share memes and email. It could be a place to store and trade real wealth. But e-gold also had fatal flaws. It was too centralized. It trusted too much. It ignored the laws it couldn't afford to break. And in the end, it paid the price for that naivety. It became a target, it was seized, it was shut down, and it faded into history as a digital ghost, a proto-cryptocurrency that never reached its full potential. But maybe that's the irony of digital money. You can't build a truly revolutionary financial system inside the old one. You have to break the rules. You have to change the game. And that's what Bitcoin would later do. It would learn from e-gold's mistakes. It would ditch the vaults and the trusted third parties. It would replace human trust with code and consensus. It would build a network that no government could shut down and no prosecutor could seize. It would succeed where e-gold had failed. But that doesn't mean e-gold was a failure. It was a first draft, a prototype, an early attempt to rewrite the rules of money, and in a way it paved the path for everything that came after. So while e-gold is gone, its ideas live on. In every Bitcoin block ever mined, in every smart contract ever executed, and in every digital wallet ever opened. It's a ghost in the machine, a whisper from the early days of digital money. And with that, we've reached the end of this series. Thank you for joining us on this journey through the forgotten history of digital finance. If you've enjoyed these stories, hit like, subscribe, and drop a comment. You've been watching The Crypto Historian, where the past is encrypted and the truth is worth mining.